All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast. The night before Christmas, December 23rd, 2021. So market close tomorrow. I'll probably produce the weekend reports tomorrow. So I want to start tonight with a review of a really good documentary on YouTube called A Life's Work, The Philosophy of a Craftsman. And it examines the life of Peter Korn, who's the executive director of the Center for Furniture Craftsmanship. The executive summary of it's only about 20 minutes and well worth your time. It was spellbinding to me. And so I want to cover what I thought the main points were. The first one was the idea that craft work, working with your hands, creates a free space in your mind to be a philosopher about the work, because your hands are working and it has your attention, and one part of your brain is managing that. And then in the quiet space, there's room to be a philosopher. And the craft work, and in his case, the making of furniture, was a perfect coming together of hand and mind. And he said that in a life of making furniture, what you learn that what matters is spiritual fulfillment, and that the craft work teaches you how to live a life of fulfillment. The documentary went in and examined how the consumerism of the 50s, which was sort of a natural response to the existential threats of World War II and the peacetime economic boom that followed, created sort of a mass consumerism in the world of Mad Men, the consumerism of the 50s and then mid 60s. But somewhere around 68, there was a reaction against that in like the hippie movement, but also the Green Earth movement. As a return to wholeness, nature, and unconsumerism. So this guy, Peter Korn, just started to make furniture. And he said, when you look at your hands as a craftsman, you're not just making muscle, but you're learning how to trust in your hands as well. And he found that working with wood really helped him understand the basics of craftsmanship, the tools, the wood, his hands, the time, the intention. And he said what was essential was that you must develop a recognizable sense of personal style, that that what people yearn for and what you yearn to make as a craftsman is the sense of your personal self-expression through what it is that you make. That it's the opposite of factory built and stamped material. And I liked his line where he said that earlier in your process, the brain turns off and the pencil takes over the thinking. The idea that the intelligence goes into your hands and in the process itself quiets the mind, and then you see the drawings and the sketches, and then later the wood taking shape under your hand. And I think all this stuff connects to how we're trying to trade, that the trading is the thing. He said you wanted to be known for something as a craftsman. Think of your work as your signature work, or that you're signing your work with your name and your brand. And so you should be thinking in your trading plan about what your brand is. How would you describe your brand intentionally? And then how would other people who are observing your work describe your brand? Mr. Korn talked about the life of in the early days, from high school through the first 10 years. And he said that for the first 10 years, the only thing he thought about was how to make furniture, not how to make a living at it, not how to raise a family or anything else, but it was simply 24/7 how he might make furniture in his own way. and that the making of the furniture for him represented the values of integrity, simplicity, and grace, and that he was cultivating himself through that effort, and that craft was the vehicle to self-understanding. Dr. Tharp talks about that, about how trading can be a metaphor or a vehicle for that self-discovery. I see it in the same way through the craftsman's lens about understanding yourself through the work that you do, not as a metaphor, but as the actual work itself. He said that now the relationship between the craftsman and his clients, that the making and the showing and the selling of the furniture was the process of communication of value between him and his client, and that the furniture reflects the values and personality of the maker, and that those resonate with the customer or the client who expresses their value of that sense of artistry in the purchase. He made a really important point, and I take this to mean our point about skin in the game, that craft and craft work is about expressing yourself differently than a recreational activity. It's the difference between doing something as a hobby and doing it for a living and expressing who you are. And he observed that you learn something about yourself every time you make something, and that the making of useful, beautiful things, for him, the functional aesthetic was that highest form of art. There are other forms of art that are maybe purely aesthetic, but non-functional or intentionally non-functional or representative or abstract or conceptual. But for him, the dignity of designing and then making useful, beautiful things was a pure expression of the human spirit as he understood it. And I thought everything that they were talking about in the making of furniture has everything to do with the way we think about designing, crafting, executing, and appreciating and studying with respect the trade frames that we use and that we execute, the ideas of templates and a workspace and tools and a workshop, and then patient reflection, but also really that commitment to skin in the game and treating it as a way of life or a profession rather than just dabbling. That feels like it makes the difference to me when you're serious about it, which is not to mean joyless, but to be serious. Some key takeaways: the idea that skill is the beginning of freedom to create skill, and that you learn more about yourself while you're learning the craft, that it's a reciprocal learning relationship. And your intention then to design products that are uniquely yours, that have your stamp on it. I have to say, when you guys post the charts, I get that feeling of identity in how you mark up your charts and what they look like and how they feel. There's a real sense of style and signature to them. And then I also liked his point about going to work every day. This is the knowledge of the feet. He says it seems like you're always slogging through it, that you're always contending with those forces of nature that want to pull you back into the mud and make things hard, and that the craftsman is always engaged in that kind of effortful action. While there is flow in it, it does require exertion, which is liberating and developmental in that sense. So I just thought it was a terrific documentary. Those sensibilities of the craftsman, I think, pertain directly to our state of mind and what it is that we're doing and how we decide to do it, and the fact that we're in it for the long haul. So I can commend it to your attention. A real respect for doing the work. All right, let's see what we had today. So today continued the the fourth day of recovery that brought us back to within an inch of the 10-day high and the all-time high. We're within $1 or so of it. So that was a strong follow through again today, a nice little gap up and a follow through, and it closed outside of the river. So our next market open, I would expect that to be a critical state opportunity in either direction, and I'd be looking for it to on the weakness of it to trace back to the Bollinger Band mean as a target down here, and then breaking out a strong possibility of a nice breakout above today's high, the RL10 and the 30-day high, which is also the all-time high. So I would see yellow zone tactical level trading inside this box, and then if it breaks above that 30-day high, then it's free and clear. But otherwise, kind of tactical trading down to today's low. I would be picking up a short orientation if it broke below that, believing that it would be hustling back to the Bollinger Band mean. And then if it breaks through there, then certainly a strong short orientation here, double to the downside. If it breaks below the river, then it gets really bad down in here. That's where I'd be having 3 positions. So that's how I see the shape going into next Monday. Meanwhile, the PSAR is solidly up, still working strong. The RL30 has reverse slope and is now facing up. Here's the PSAR extension, I would say. Quite an extreme move these last 6 days, from a 10-day high to a 10-day low, back to a 10-day high. That's quite a roller coaster ride this week of directional trading inside this larger 30-day channel. It's been quite an adventure. The RL270 is just quietly grinding straight up. Says, what are you even worried about? This thing is, don't worry about the noise. The RL270 has, remains very positive and shaping upward. And the even the RL90 got flat a little while, but this is still pointing straight up. So everything's pointing to up right now. And then again, so close to this 10 and 30-day high. That's why there's tactical vulnerability to the downside. And if you don't believe it, just look back 8 days and you see this. So we get rewarded by paying attention to the tactics in both directions. We're making bank living in this space between the edges of the 30-day channel. If you just take a look at it that way, those two moves that make the letter V, it's actually 4 moves, 1, 2, 3, and 4. That has been lucrative for us for the intraday traders. Just noticing the size of those daily ranges has really favored the tactical traders. But we're coming into the station again for a critical state. The last 2 times it was up at these price levels, there was a 5% sell off. So we'll be mindful of that. But at the same time, we're ready for the next leg up. If it can get through that 30-day high, then up we go. All right. So that's what it looks like to me. Let me know if you found that helpful. All right, pretty tight range on the 6 indexes today. Am I missing one here? 4, 5, 6. Oh, there we go. Yeah. So the equity indexes were all up today. S&P at 0.62. The Qs were slightly better at 0.75. The Russell was the strongest at 0.8. So pretty tight range on the upside. On the downside, the diamonds lagged a little bit at 0.55, emerging markets 0.52. So this was only a 0.3 stretch from best to worst among the 5 indexes. The treasuries were the worst off, minus 0.87, to close at 148.50. Let's take a look at the sectors that dominated today. So we had Mexico was still good, 0.77. ARC Innovation, lithium, up 0.8 and 0.9. Materials, wheat and precious, the FANGs, oil, discretionary, S&P, bio, moonshots, all between 1 and 1.9%. Marijuana, 3.25%. Blockchain 4%, Bitcoin 4%, Ethereum 5%, the Bitcoin Trust 5.7%, and the blended large cap cryptos 8.25%. Really strong move in Tesla. Some of the guys got that move as it crossed over 1,000. There was a real strong move to 1060 and then closed at 1067. Coinbase 5 1/3. Robinhood, U.S. Steel was strong. TX, the steel company, John Deere, all, so the materials were all good today. All right, the sectors that underperformed. Both lumbers up 0.6. Tech and clean energy 0.55, blended commodities 0.54, finance 0.52, consumer staples 0.23, agriculture 0.15, energy basically flat at 0.05. Simon Property Group also basically flat, minus 0.05. ARC Genomics, oil exploration down 0.38. Brazil finally underperformed 0.54. Then Devon Energy and VIX -1. So even the losers were basically up today. Everything was drifting upwards. So Devon Energy 0.57. Virgin Galactic minus 0.48. Alcoa, PayPal, and Squarespace basically flat. Microsoft and Apple slightly underperformed at 0.36 and 4.5, and Cliff at 0.55. So pretty much made money today on the long side, but with some real clear leadership here in the discretionary, selected techs, and the cryptos. And I like that the Russell was the strongest sector today. All right, let's take a look at the traders today. All right, Wojcik was able to get the 1-minute charts working. Now, here's what I'm going to say on that. So there's still an awful lot of let me get this a little pen tablet. There we go. Yeah, so you still got a lot of unused space here, and what that does is make all this stuff compress, so it's kind of hard to see the symbols. But now you will actually see, compared to the 5-minute chart, you're actually getting a little bit more separation in the moves, so they're a little easier to see. What I'm going to say though is, when you get up in here, you're still really tightly connected, very small risk and reward. So you're going to get a lot of these little false starts, which is fine because they're not costing, they're only costing 0.1 and 0.3. And when you're getting paid off, it's +2. Now, what I'll say on this one, nicely done. There was a re-entry available here. You might have taken this one or this one. You would have stopped out, but this one would get you a better move. And then your standard exit should have been here rather than here, to be straightforward. So that one was late. And then you're probably a little gun shy. So that's where you want to get it at the PSAR flip. And then this one would pay off better. And now on your big winning trades, you're letting a lot of it get back. Whereas if you just took your standard exits and your standard entry, that one would have been probably +4 instead of +2. Good scratches in here. Again, if you just take the way that you have been trading and you get short here, you get paid on this one. Good scratches. This one is late getting in, should be about here. Then that's a pretty good exit. So this one paid off slightly in your favor, but there was more to get. Gave back a lot here and had earlier opportunities in here and here that were not taken. So I still think doing some good work. You're starting to develop some feel for this. And then I would also say, this is your first day on the 1 minute. So just get a feel for, the difference in the size of the moves, the speed of decision making, and you're well along the path. So here's one where you're trading in the middle of the river a lot. This whole series. And remember how on the 1 minute charts, how tightly this is expressed. All right. This is not very much room, but you're not winning or losing much in here. This one, again, if you're going to stay true to all the tight stops and entries here, then you should be stopping and reversing here and then exiting here instead of all the way down here. And then that would turn those, instead of -1.3, that should be about +1. Late exit here. This is better. You got the immediate stop and reverse, good exit. This one, here's your PSAR flip. This is the indication of where to get short. When it crosses the PSAR and crosses that RL270 while it's pinching, then you would actually get paid on this one instead of scratching. Yeah, here's the one you missed. But this is a good stop and reverse and crushed it. I probably would have tried that one again too, and then end up scratching. So the -1 should probably be about +3 once you get used to the timing. But you're in good shape there. Building muscle memory right now. GC is up next, the gold. This one tends to have bigger swings. This is one where, I'm wondering why you're not short from here, but this is that'd make that a good second position. I think you want to capture more of that. And then this is your either here or here with your PSAR as a stop. You get in there, and that's probably 3 more R onto this. That makes it probably 6.5 instead of 3.6. This would have been very tempting on the Z3 breakout for a third position. And then this one chases you out. And then when it fails to get to the PSAR, you got to get that one again. And then here's your short. Here's another short. This one could have been here, but still, that's a pretty good move. When it gets this far, you're at 4, 5, and +6, and then reverses. That reversed 2.5 R from the maximum excursion. This is how much you gave back. I mean, you captured this much, which is good, but you gave back a ton on that one. And then here's your Kata 2 reentry. So we left a lot on the table. You made 6, but this should have been over 10 once you get used to that timing. Here's Chi Wing Chong with a couple in the triple leveraged financials. So FAS is the bullish member of that pair. He sees the gap up. So he gets the 1, 2, and he has his little frog box. He says, let's get it. He gives back about one wrist box, cashes a nice one, tightening the stop to the top of the dragon. Here was your indicated PSAR short if you were going to get that. Now we're going to see that he gets that trade, but in the FAZ member of the pair. So he actually gets that trade. And then when he cashes that trade in FAZ, he then comes back to FAS and gets his nice scratch in here. So he gets 3.5 on this one. We're going to see that this is about a 2.8 on the other one. On the other member of the pair, it's also going to be up and to the right. So again, this is where he gets his trade in FAS here for 3.5. And then this is where he gets the PSAR flip and crushes that with a 1, 2, 3 exit. Perfectly played for 2.8. So, 3.5 and 2.8 gives him about 6.3 for the day on the financials, and no overnight risk. We can live with that, can't we? Yes, we can. Nice work there. This one is in S&P minis. I think we actually saw that one. And here's Joe with the S&P minis. So this one's pretty good. There was not a lot of movement in this today, but you got what was there. And there's the gap up. Maybe we can get this here instead of here, but that's kind of the one, like a 1, 2, 3 entry. I can live with that. Good hold all the way through, comes back and catches it at the PSAR for 0.75. This would have been tempting to me, the hold at the Bollinger Band mean and then starting to work and then maybe capture that. That's one to study as a Kata 2 reentry. Good scratch. You got what was available today. And then I think just stay with this one here and watch for that pattern, the reentry. This is failure to fail. It did not fail through the Bollinger Band mean. It did not fail through the VWAP. It did not leave the pinched river. It did not get to the RL270. Those failures to fail is information, and then that leads you to this trade. Okay, so good work there, Joe. Continue into March. All right. Daily reports. Still, market is bullish, volatile. We're back to overbought on everything, I should say. The risk Z is showing us the way to the upside now, looking to get that kind of a move. If we see weakness next week, the first two to look at for getting short are EFA and EPP. I would wait to see failure before I jumped on them. IBM and McDonald's and United Health still looking strong. On the max pains, still Nucor, Pfizer, and Walmart and Home Depot are lagging. Tons of dojis today on low volume. A handful of auto framers still looking solid. In the ETFs, only five dojis, half a dozen symbols that test out well. To me, Brazil is the opportunity yet. That's the deepest value play. Auto framers straightforward. We'll frame some of these tomorrow. If you post the charts, we'll take a look at them. But to me, Brazil, Latin America, Walmart right at the top of the stack. And I like Microsoft right at the edge here at 2.0. Daily squeezes, a lot of them today based on the reduced range of the day. I like it when IWM mid caps and Microsoft are all tightly squeezed. That means there's a coiled spring effect, and even the S&P is coiled at 2.4 to 1. I like that, along with the DIA and Intel and Home Depot. So those are the ones that I'd be looking for a big breakout kind of a move next Monday. An equal split now between summer and winter, a tale of two markets. Ethereum's coming along really well. IBM, Tesla, Bitcoin, looking solid. I like the S&P and healthcare in the green all the way through. Real estate is still looking pretty good. As is Mexico. Mexico's looking very good. That's everything we have for today. Testing the top of the river. Nice. All right. We'll be ready tomorrow for some swing trade frames and some lessons. I'll be answering some foundations questions tomorrow, then again also on Saturday. All right, guys, that's everything we got for tonight, and we shall see you tomorrow for some trade frames. Take good care and enjoy these holidays. Cherish your family. Be safe out there, and get into the spirit in these tough times. Take good care.